Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets.
Or the charts that move the markets.
Yeah, in this particular week, it's going to be charts because we are missing Tori. But Robert, you were out last week, so welcome back.
Thank you. Good to be back, Miles.
So where do you want to start today? How about gold with the gold show?
Yeah, I'm not surprised gold's pulling back here because yesterday it looked like it wanted to break out. At least silver did. And gold was wanting to break out of the declining trend line that it had, and it quickly reversed. Both of them did. So it kind of pinpointed up, looked like it wanted to break higher, easily could have, but actually we're glad to see it cooling off here. And I think this is the start of a few-day decline in the metals market, which is what we want. We want this thing to kind of consolidate, draw back down, pull that string back, and be ready to launch higher. We don't want it to just go straight up. So this is the pullback we've been watching for, and it's here now. And how deep it goes, we'll look at some of the charts here and see what happens.
Well, and the nice thing is with that lower high that we put in here at the end of August, beginning of September, we're now building a very nice compressing channel. So yes, I would agree with you. I think gold probably takes another step down, at least to the bottom of that channel. We may have a little bit more bouncing up and down in gold, but eventually you are going to have a break out of that pennant one way or the other. I think you and I are in agreement. I would also like to see some more down movement in gold. I've been talking about that for a couple weeks. And anytime we can still get some pullbacks, get some correction, move down in any market, it means that we haven't quite hit that manic phase yet, which I don't want us to be in.
Not yet, but it's coming. I think what's also nice to note is you have a lot of the other markets corresponding to what gold did yesterday. You have the dollar that found a bid. It started coming up from yesterday's number. It's remarkably been bouncing off that long trend line that we did on the show 3 years ago.
4 times now.
Yeah, and it's hovering right around it. Dollar bounced up. The euro-dollar pair slid, so dollar is getting stronger. Gold's been tracking a little bit with the euro, so not surprised to see that trade together. And this could be the pop up in the dollar that we're going to be looking for that'll put a little downward pressure on the metals before the dollar resumes its long-term decline and gold resumes its long-term bull market. Gold's next stopping point after this correction is going to be in the $2,200 range. So this is going to be your opportunity to be buying before gold heads higher.
Yeah, I'm glad you brought up the dollar, Robert, because I was looking at that over the last couple weeks, just this bouncing pattern down following that, as you mentioned, long-term trend line from a number of years ago, back when we were at the top end on the dollar, up around 100. So if we get a breakdown below this, I agree with you short term. I think we have a reversal. You have some RSI divergence reversal back up, maybe to around the 96, 97 mark on the dollar index, and then turn back down. And I think this next turn down pushes us sub 90. I think we're looking at 87, 88, 89, getting down to those early 2018 lows on the dollar. I don't see any other direction for the dollar given the rampant amount of inflation that we've put into the system for 2020. I think we're at about between 2 and 3 times as much as the expected increase to the national debt this year, expecting about a $2 trillion increase. Now they're targeting more between 5 and 6. And then following last week on the heels of the Jackson Hole meeting, there seems to be no end in sight as we continue to deploy the only weapon that we have in this economic crisis, and that's more money printing.
So that was gold. Silver did a little head fake the same way yesterday. Silver was stronger than gold, yesterday being Tuesday. Today's Wednesday. You'll hear this at the earliest on Thursday. So silver did this head fake, looked like it wanted to break out, and if it had, you just wanted to be in. Because when silver breaks out above the 29 range, the previous high, it's going to run to 34, 35. So if it were to do that, then you just want to be in with silver. But silver looked like it wanted to do that yesterday. And then in the middle of the day, just came back down and had a reversal candle yesterday. And so not surprising to see it pulling back more here. And it won't be surprising to see it a little lower. What do you think, Miles?
Yeah, for me, it wasn't surprising to see silver turn around, at least for the interim, like we've had since yesterday. We put in a high, a little short-term high back in the beginning of August at around just shy of $30. And then we came up a week later, we retested it, failed to break that high, and then obviously we had the big drop there around like August 11th, August 12th. Silver's been stair-stepping back up towards that. We looked at that compressing pennant on gold. However, silver has put in higher highs, so it's a rising channel. It came right back up into that right shoulder back from the middle of August and then turned around. Now, silver remains more volatile than gold. Gold hit that high we looked at, and it's working its way back down to its lower trading end. Silver hit its lower trading end today. So what would interest me is if we saw silver break below that, because gold's not down there yet. So since gold probably still has one more step to take down this week at least, just to stay within the trading channel, if gold does that and silver continues and follows suit, I think that's signaling the lower prices, Robert, that you were talking about a second ago.
I hope so.
Yeah, that gives us a bit of an indicator stating, hey, we've had a short-term breakout down, which I think then puts silver at least down to about the 24 and change, 24 and a quarter. That's your 50% line, and a retest of that price, which we hit back in August, and possibly even down as far as the 618 fib on this last move, which puts us down at around 23 and a few pennies over.
Yeah, that's good. And something else in the metals market that we don't often talk about is the miners. The gold miners did very similarly to what silver did. It obviously had a reversal day Tuesday. And so the miners, we don't often talk about them here, but we'll talk about anything metals related if you want to give us a call. The miners, same type of action. And so it's indicating that the markets do want to kind of slide lower here with the metals market. Something else corresponding to the dollar that I had failed to mention when we were talking about the dollar is the dollar had this large move from around 88 all the way up to 103, which was 2018 to first part of this year. And then since the first part of this year, the dollar's been in a decline. It actually just recently hit the 762 fib number and just bounced right off it. So because this is a chart show this week especially, that's an interesting thing to see, is the dollar coming down and hitting this fib level just right spot on and bouncing right off it.
Sure, and one of my favorite indicators is when a bunch of them all line up at the same price.
Exactly.
So when you have this RSI compressing divergence down into something like a massive corrective 786 fib, that looks like a very strong signal for at least a short-term, let's say, respite in the downwards pressure on the U.S. dollar. And that's going to affect the other markets, because obviously the U.S. dollar is the biggest market on the planet. So therefore, what the U.S. dollar is doing, you can see other things like gold end up doing the opposite. So moving over to the other white metals, your industrial platinum, palladium metals. Platinum got crushed this week, hit pretty hard. It's put in a third bottom, sub 900. And this last fall here today was pretty substantial, dropping from around 960 all the way to around sub 900. If we don't hold this price level, you're looking at platinum probably back down in the 830s, 840s at least. Now, that would still be a pretty shallow correction down, given we started down sub 600 back in March after the big price drop. So you're still looking at stair-stepping up. You're still looking at very bullish movement in platinum over the last couple months. But just like gold, just like silver, we could see a break of some of these low-end trading ranges and low-end support levels. And if that ends up being the case, then it wouldn't surprise me to see a number of the metals continue to slide leading into the election.
Yeah, I think we zoomed in a lot on the metals this week. Definitely want to zoom back out before we leave, because we do think this is the buying opportunity that we were looking for, so that on a longer term time frame, you have gold is bullish, silver is bullish, platinum looks like it is building this big base, and looks like on the next rise in gold and silver, I think platinum turns bullish with them. And I won't be surprised to see, once it breaks the 1,050 roughly high, platinum follow and have days where platinum's up like $50, $100. I'm not going to be surprised in the next few years when that type of thing happens. But just want to clarify, gold is bullish, silver's bullish. this pullback is your opportunity to be buying for the next few years' rise in the metals market.
So on the heels of our pending dollar reversal and the corresponding market movements from there, I do want to give my hats off to the Nasdaq, now 27% up above its previous all-time highs and putting in what looks to be a reversal candle today. So be on the lookout for some dollar reversals, especially with where the Nasdaq is, a reversal there in the equities market, as well as both the Dow Industrials and the Dow Transports coming in to start retesting their previous all-time highs. So to see those fall a little bit short as the dollar turns around and have those markets reverse back down along with the precious metals as people rush back into liquidity if the dollar turns back around. So that should do it this week.
Oh, no, not yet.
That's not going to do it this week.
But we looked at the put-call ratio on the S&P, and it looks like a lot of bullishness in the stock market. Put-call ratio, it's showing tons of action on the call side. So all these bullish players coming in, buying calls. And it's been attributed to a lot of the new retail accounts at Robinhood and that type of thing. And if you look at the put call ratio, it corresponds to a lot of the times when that's low, almost every single time, it corresponds to a high in the stock market. Well, the put call ratio is at an extreme on the bullish side, people buying so many more calls than puts. And so it looks like the value on the stock market is just in never land up where it is because of a lot of the buying in the call market. So that tends to indicate a high in the equity market at some point. Maybe it keeps going higher as it has been, but at some point you're going to have a violent reversal. So I think that might be the trigger of what maybe boosts the dollar temporarily, puts pressure on the metals market temporarily. That's your opportunity to be buying metals.
Hey, just wait until the Dow hits 50,000 and nobody cares. Nobody will care at all.
Somebody will.
It'll just be one more number. It's not going to mean anything to anyone.
Well, that's inflation for you, right?
That's how it works.
Yep. Well, that does it for us today. Golden Rule Radio. Thanks for listening. You can follow us on Twitter at ICA Gold. Like us on Facebook, McIlvaney Financial. Our website, McIlvaney.com. Give us a call, 800-525-9556. Thanks for listening. Have a great week.